Good morning. Welcome to Stock Market Today. It's Wednesday, August 14th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities rallied in Tuesday's trading. Another turnaround Tuesday on improving U.S.-China trade headlines. All sectors were higher on the day, led by tech and consumer discretionary. Bond proxies underperformed. Treasuries were under pressure, though the curve continued to flatten. Dollar was up against the yen and also stronger against the euro. Gold finished down 20 basis points after trading up more than 1.5% earlier in the day. WTI crude settled down 4%. Tech, discretionary, comm services outperform. Utes, REITs, and energy underperform. Basically, the U.S. said it would delay tariffs on a portion of Chinese imports until December 15th, which included key consumer products, including consumer electronics. But for now, the rally appears to be short-lived. Futures pointing to a lower open, down 90 basis points, and all eyes are on the now inverted 210 curve. Asian markets were higher overnight. European markets were weaker, with Germany and Italy the standouts to the downside. Treasuries are stronger across the curve. The dollar is on the defensive against the yen, weaker versus the euro. Gold down 20 bips. WTI crude off 1.3% after rallying by 4% yesterday. So let's dive right in. S&P 500, another fade from the 50-day moving average. A little kiss on the 50-day. And then a fade, and as we said, futures are trading lower here this morning. Support remains in that 2,800 to 2,850 zone. Resistance is in the area between 2,950 and 3,000. RSI cannot get above 50 so far on rally attempts. Remember, we've been watching the character of the RSI closely. And what we want to see is bulls, if you're bullish, is the market retake the 50-day and the RSI shift back to bullish ranges. So far, not happening. Chaikin money flow is bullish, so a mixed bag from the indicator front. And as I've been saying now for the past few days, we're open to the idea to just a range-bound market. Some bouncing back and forth between the moving averages, a lot of volatility in between, a lot of headlines to whipsaw you one way or the other. If you don't have a process, trading off of those headlines is going to be extremely painful for your portfolio, in my opinion. Better to have a process. Focus on the leading areas of the market, which are outperforming, and look for your best opportunities there. I highlight that in my note today to Chaikin Analytics clients. For those of you who are members, take a look at the front page of my note today. Your market in a minute now. What are we talking about in that note? Stocks rally as President Trump delays tariffs on some Chinese imports. Sentiment measures are more fearful than greedy. Okay, it's been like that for about a week now. Main yield curve inverts with twos trading over 10. So I want to focus on leading industry groups in a range-bound market, and futures do point to a lower open here today, as we said. Take a look at the power bars now. Some shifting. Small caps back to positive with their 1% pop, although they did underperform once again. Dow at 9 to 4 bears to bulls. S&P 500 102 to 89 bears to bulls, following a 1.5% rally. NASDAQ big outperformer led by tech. 25 bulls, 23 bears. Bonds downtick slightly, and there was tech up 2.5%. 16 bullish or very bullish stocks in the tech sector. 14 bearish or very bearish stocks. President Trump's tariff delays really centered on a lot of consumer electronics, so that helped lift tech, in particular the semiconductors. According to the Chaikin Power Bar, small cap stocks remain somewhat more bullish than large cap stocks. Major markets are mixed. Let's turn now to our stock of the day, which is Zimmer Biomet. Zimmer Biomet closed at 138.17 yesterday, down 24 basis points, so an underperformer. Has a very bullish Chaikin Power Gauge rating due to very strong price volume activity, very positive expert activity, strong earnings performance. Financials in the middle of the road. But when we roll up the 20 factors, 5 in each of these categories, we come out with a very bullish rating. We have a very bullish stock, strong trend, strong industry group, type of name we want to consider on the long side of the portfolio, right? Following the process. Market and model are in agreement, bullish money flow above a rising long-term trend line. Now, we're just shifting here. This is a bit of a personality change. Rating turns bullish while the stock is still underperforming, and then the stock begins to outperform, and intensely so, following that earnings announcement. This is what we call a personality change. From a technical perspective, you have a breakout through resistance at 130, and now some choppy trading in between. For me, this is my key. With the market still choppy, type of name I want to consider, obviously, but I want it when it's oversold. I want the overbought, oversold indicator below 30 or close to 30, all else being equal, i.e. we're still bullish, we're still outperforming, we still have bullish money flow. Then this is a much more compelling setup in the current environment. Overbought, oversold indicator, key for me from a timing perspective, especially as markets are choppy. But Zimmer and Biomet, certainly the type of name we want to consider on the long side of the portfolio. Take a look at that. Add it to a bullish watch list today. Sector tracker now. Movement of the major sectors over the last 5 days. Tech at the top of the list following yesterday's big move higher. After that, we still have the defensive feel with REITs and staples rounding out the top three. Staples benefiting from defensive positioning, REITs defensive positioning, and lower yields. Materials, you've heard me talk about materials. You've heard me say we're warming to it. You've heard me say we're going to start looking for opportunities there. Last week in my note, we highlighted Kirkland. It's precious metals that are driving the materials so far. Healthcare, discretionary, and comms are middle of the road. Utes and energy and industrials all higher, but towards the bottom of the list. Financials towards the down over the past 5 days, largely a function of those falling yields. And speaking of falling yields, regional bank services over the past 6 months has underperformed the S&P 500 by nearly 16%. Now, from a fundamental standpoint, financials, these banks look good. 35 bulls, 14 bears based on our model, which is skewed heavily towards the fundamentals. It is ranked number 5 of 21 subsectors, and it's moved down 2 slots over the past week. Now, some indicative names, if you want to go looking for ideas, you can look at names like First Horizon or First Foundation or QCR. They all have very bullish ratings in Chaikin Analytics, but this is not a strong industry group from a momentum standpoint, right? It's underperformed by 15.5+%. And here it is. Here's KRE, the SPDR S&P Regional Bank ETF has a neutral Chaikin Power Gauge ETF rating. You can see it's in a nice steady downtrend, moving from the upper left to the lower right. It's been underperforming the market for the majority of the past 12 months. Money flow is a bit of a mixed bag. It was more intense back here. And now as we've chopped around with a downside bias, we've had some choppy money flow. Fund is oversold, but it's below the declining long-term trend line, so that it is a weak trend. I can't get excited there. I can't get excited about these names in the interest rate environment. Maybe if something changes, fine. But it's hard for me to get excited about this group with interest rates heading lower and with scope for them to head much lower, considering yields around the globe have gone into negative territory. I just can't get excited here. KRE, solid do nothing in my book. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Symantec catches a bit of a rebound, up 6.7%. BBY, Best Buy, beneficiary of the delayed tariffs on consumer electronics products, obviously, as you can imagine. A big portion of their revenue comes from selling consumer electronics. Micron and Lam, memory, tied to memory. Semiconductors had a good day yesterday. Micron and Lam leading the charge, up 4.8% each, roughly. Those of you who are Chaikin Analytics members will recognize Micron as a bullish idea from last week. And for those of you who read my market survival guide, you will recognize Lam Research, LRCX, as a bullish stock idea published yesterday. As we walk through and focus on what's outperforming and what's not performing well. Tech continues to hold up in the choppy tape, and semiconductors are holding up relatively well, so that has caught my attention. WestRock, WRK, 4.3% to the good yesterday. Didn't see any real news to drive trading there. Southern Company, bullish stock, down 2.5% yesterday as they priced a unit offering. Cabot Oil and Gas, part of that mess of an energy group, down 2% yesterday. Newmont down with gold. Gold had a big reversal yesterday. Newmont trades lower, 2.08%. UDR priced the secondary, sent that stock lower by nearly 2%. And Helmerich and Payne, just another energy stock tied to the energy sector that is trading under pressure. Earnings update, Dasan Zone, Sol, beat by 19 cents, DZSI. Myriad Genetics missed by 10 cents, and IIVI 26 beat by a nickel. After the close today, bullish CACI and neutral Agilent A. All eyes are going to be on Macy's here this morning pre-open. Haven't seen their earnings cross the tape just yet, but we can take a look ever so slow. Let's see if we got anything. Haven't seen them come across the tape yet as of this recording, but I will take a look. After the close, everybody's going to be watching Cisco. Cisco is a good read for tech spending, give you a good sense of what's going on in the technology environment. So all eyes are going to be on Cisco after the close. As I look, I have not seen Macy's earnings come across the tape just yet. All right, let's get into it now. Wednesdays, we look at sentiment. Sentiment has turned more fearful than greedy. Here's a spike in the CBOE equity put call ratio up towards that 0.75 level that's tended to mark near-term lows for the S&P 500. Not there yet, but this does speak to the bearish sentiment in the market. Investors are either protecting portfolios or betting on more downside. But you can see that when we get these spikes above 0.75, they generally coincide with local lows for the S&P 500. So for the contrarians out there, something to start to be mindful of. And remember, the internet, the news, the media is going to go crazy today with the inverted 210 spread. Right? It's going to happen. Everybody's going to be talking about it. Just to give you a little bit of context, market tends to rally for about 14 to 18 months after the initial inversion of the 210 spread. If you're looking for a recession as a warning sign, on average, it comes at about 22 months after the inversion. Now, it's an average, right? Could come before, could come after. But just put it in perspective as everybody is getting excited about the 210 inversion today. Take a step back and say, well, what does this really mean? What does the market do after an inversion? And near-term choppiness usually gives way to some bullish activity within the marketplace. So just keep that in mind. No reprieve for small caps versus large caps. Here's the IWM relative to the SPY, just breaking lower now to new lows, down below the 200-day moving average, and the RSI of the ratio continues to exhibit bearish activity, remains in a bearish zone, confirming the downtrend. Now the ratio, as we said, you can just see here, nice steady downtrend, and the IWM has been range bound for a while. Not even coming close to threatening last year's highs. I can't believe it's been about a year, but that is the case. So just something to keep in mind as you're thinking about equity positioning. If you are tossed up between two names, right, both have positive attributes that you look for entering a position, and one's a small cap and one's a large cap, I would say lean towards the large cap, right? There are still opportunities out there in small cap names, but as a group, they continue to underperform. So it's just something to be aware of as you're thinking about setting up your portfolio and looking for ideas. Just no reprieve for small versus large, which is kind of interesting because we have a more positive trade headline yesterday, but still no upside from the small caps. Finally, if you are looking for ideas, when we talk about looking for leading stocks and leading industry groups, those stocks tied to the home builders have been outperforming. So MDC, Construction and Building Services, has a bullish Chaikin Power Gauge rating, is outperforming the market. The overbought oversold indicator is rising from an oversold position. Money flow is bullish. Stock is above a rising long-term trend line as it consolidates here. I gave you the checklist, right? All green checks. This looks like a compelling stock to own within the current environment. Right? Leading stock, leading industry group becomes oversold with bullish money flow. Certainly the type of name you want to consider. It's actually my bullish stock idea in my note to Chaikin Analytics clients today. So just to give you a little flavor of what I'm looking at in and around the marketplace. So that is going to wrap it up for today. Head over to chaikinanalytics.com/today, where you can sign up for a free email to follow along with this show. You'll get daily stock ideas for you to consider every day. Hits your inbox before the market opens, and a lot of the content that I pull for this show comes out of that email. So you'll be able to, as I said, follow along. And for those who are interested, check out my market survival guide, weekly action plan for surviving and thriving in any market environment. I will see you back here tomorrow.